This is Chris Evans of QFacts, and this is Working with Oscillators, Part 3. Now in the last video, we found a system using RSI with a look-back of 5, which when it was screened for 200-day moving average differentials, we were relatively happy with the outcome. The solution looked attractive. Opening range breakouts were used to get an exit. Now I'm going to introduce a new oscillator, which will take trend into account, and we'll see if we can improve on what we've already done. Here's the new oscillator on the bottom, and when it takes trend into account, what happens is that during trends in the market that are significant and aggressive, this oscillator reverts back to neutral or zero, whereas a conventional oscillator like RSI, could be stochastic, doesn't really matter, will move into overbought territory and stay overbought for the entire duration of the rally. That's not very helpful if we're trying to find entry levels, obviously, into a rally, and we want to avoid getting short during rallies like this. So when it's neutral, clearly we're not going to get any more sell signals because the market's not overbought. And the other interesting element of this is that when the market becomes neutral, you can see with the oscillator is neutral, the market is still trending. That now a pullback, which is what we got in this range, generated an oversold condition in the new oscillator, whereas a conventional oscillator pulled back as well. You can see it here, but it's pulling back from such an overbought level it would never reach an oversold level, so we would never gain entry into this trend. Now let's just take a look at the difference in performance. This is the old system with the same settings that we're familiar with. The oscillator is set to RSI, a moving average differential screen is used, and this is using a 0.75 standard deviation move away from neutral, and these were the results we looked at that we liked. That's a $350,000 profit level for the 20-year period. Now what I'm going to do is I'm going to switch this moving average screen off, and I'm going to change the oscillator to the new oscillator and leave everything else the same, and we'll look at the performance. And the profits here now go from 350,000 to 650,000, which is a radical improvement. And in fact, if we actually ran an optimization for the new system, where we leave the screen off, we leave the oscillator the same, and we optimize across a range of standard deviations away from zero or neutral, we find that in every single outcome, every single solution, the profits are higher than they were in the RSI solution. 428 all up to 735, and you can see here the range of standard deviation movements. So in the future, this is the only oscillator I'll refer to. The important thing is you can see how it's working looking at this screen, and it can be that the signals can be at times entirely different than a conventional oscillator will generate. We'll look at how this performs in other asset classes next.